Hi guys, welcome to the MCQs of CA Inter Financial Management. I'm CA Jalota. We are on a mission to be doing every possible MCQ with detailed explanation. This covers up your theory. Somewhere it also acts as a revision for the practical course that we all have done. Let's start it off the question for today. It's on types of financing. Just one thing before I start. Every Saturday, Sunday, please note at 9 o'clock. Complete lectures of costing are coming out. Do not miss that. They are enough for you all to be getting more than 19 costing without a single rupee getting paid. There are soft copies of the books that are provided. Apart from that, there is a ranking of every question, summary of every question. There is a homework section. There are tests that are done at the end of every chapter. Don't miss it up. Okay. Let's start it off. The question for today is debt capital refers to. Okay. Give me the four options, please. Money raised through sale of shares. Okay. Second one, fund raised by borrowing that must be repaid. Okay. Third one, factoring accounts receivable. And lastly, inventory loans. Now see, let me talk of few of these four options. But before that, in case you know the answer, comment right now. Now see. Let's talk. Factoring accounts receivable. I guess accounts receivable, factoring accounts receivable. We all have done a chapter called as factoring, as part of chapter number 9. In factoring, what do? We have our invoices with us of the goods sold to our customers, but debtors will pay us after some time. We want the money right now. If you want the money right now, one service that you can be using is factoring. It's very expensive source, but then please do remember it's a short-term source of finance. It helps you to get or to convert your debtors immediately into cash bank. In case you want to be using, you can approach banks that have the factoring service. The world's one of the biggest ones is HSBC Bank. You all can go over there, use their factoring service. There's a company called as Altline, very famous in US. You can go to them, they provide factoring and so on. Next one, inventory loans. You can always try to be taking loans by keeping your stock as mortgage. Okay. These loans are for the purpose of your working capital and of course will be short-term loans only. There is one other option, that is you can raise the money through the sale of shares. Now, if in case you're going to be coming out with issue of shares, obviously that is going to be a long-term source of finance. Okay. So these are few of the things. These were the three options that were there also. The last option that is left was of debentures. This question is all about debentures. Few of the things about debentures or debt you all should be knowing. First, debentures is obviously a long-term source of finance. It helps you to get money for a longer period. It could be 3 years, 4 years, usually 5 to 10 years. So therefore, in case you are looking to launch your business, in case you are looking to expand your business, in case you are trying to be implementing some long-term strategy and you require money for it, then debt is a good source of having that money because it is not immediately repayable. Of course, one other thing, if you're going to be taking debt or loan, then you have to be periodically paying the interest to whomsoever you all have taken the loan from. If it is debentures, you pay the interest to the debenture shareholder, to the debenture holders. Please do remember, rate of interest is fixed and interest is always a charge against profit, not appropriation of profit, charge against profit. The third feature over here, they are usually secured in nature. You have to be keeping something as security whenever you are taking a loan or you are issuing debentures. These come in the category of secured loan in your balance sheet. Okay, they are not unsecured. Usually they are secured as such. Okay, and the last feature in this case is that they have a limited life. You cannot have irredeemable debentures. If you have taken a loan, there has to be a tenure attached with it. And in that much amount of time, you have to be repaying the amount of debentures that you will have taken. Debentures or debt. Okay. So these are four of the features that you all should be knowing about debt or debentures. So therefore, debt capital refers to, I guess, A cannot be the answer, that's sale of shares. C and D cannot be the answer, those are short-term loans. It has to be B, funds raised by borrowing that must be repaid. So answer should be B over here. That should be the correct answer. That is the correct answer. That's it from my side for today. I'll see you all next time in another question. Till then, take care. Happy learning. Bye.